Welcome back to the Real Estate Quick Tips. I'm here with my new agent, Cole.
How you doing, everyone?
We're gonna go over the do's and don'ts of the loan process. We'll put all of the do's and don'ts in a list below of the description and in the comments so that you can keep them for your records and go back and refer to them, or you can contact us and we can go over them with you. So basically, there are some do's and don'ts when you're in the loan process, or when you start the loan process, while you're in the loan process, and close to the end of closing a loan and buying a home. I'm gonna go through the do's, and Cole here will go over the don'ts. The first one is, for the do's, on the do's side, is complete your application thoroughly. So what that means is, when there's a lot of mortgage companies out there, a lot of lenders, and they all have they do an online process, or they do an application, a written application. That's old school, but most of it's online right now. There are certain steps that you'll get, and you'll go through down the list online, and if you don't fully complete all of that, it'll delay the process of getting a pre-approval letter and ultimately delay you when you want to put an offer in on a home that you find. So you want to make sure you thoroughly go through the process, get together all the statements that you have and that are required, depending on your profession. If you're a W-2, 1099, you're a business owner, there are certain things you'll need to fill out and answer, and there'll be certain documents you'll need to upload so that they can properly pre-approve you. The next do would be to respond to all questions and requests quickly. So the longer you take, like I said, it'll delay the process when it comes to getting the pre-approval, or during the loan process, if you're already accepted and you're going through all the steps and they need another document, or they're doing a rapid rescore on your credit and they need a specific document or a statement, you want to make sure you get them that information as quickly as possible. The next one would be to disclose all the loans and credit lines that you have open. So if you have a car loan and you have a business loan or any type of loan that you have, you want to make sure that you let them know, because when they do run your credit and background, they're going to find out anyway. So you might as well just be upfront with the loan officer that you're working with, or the bank that you're working with. The last do on the list would be to make sure that you're available as your closing date approaches. So we all know that you're busy and you have work and you may be traveling, or your work schedule is tight and you're only available certain times of the day. You want to make sure that if you need to request time off, or that you need to make sure that your schedule is open, do that accordingly. If you know your closing date is approaching, you want to make sure that you're ready to go, because that title company, that lender has other files open, and there's only a certain amount of time that they have to squeeze you in there to get your loan approved and closed. So you want to make sure that you work around their schedule and your own schedule with your current position, your job, whatever your situation is. I'm going to pass over the reins to Cole here, and he's going to go over the don'ts.
Good afternoon, everyone. This is Cole Gaiuto with Local Real Estate Company. I'm going to go over the don'ts and the things you should not do as you start the loan process. As you all are aware, and Steve mentioned, the loan officer is going to ask you if you have any open lines of credit, any other loans out, car loans, something like that. Be honest up front with this type of information, because it could affect your qualification in regards to the pre-approval. Also, large purchases, new cars, furniture, anything like that. You want to wait until you close on the home before you venture into any of those purchases, because opening a line of credit or getting a new car, which is considered a large purchase, can drastically affect the approval process and ultimately put you in a negative situation come to closing if you do end up making a big purchase throughout the period of the contract.
I just want to add something to that. So you are on, say you're getting approved for a loan, and you're right on the edge of your debt to income ratio, and you're right at that cusp, depending on what type of loan you're doing. For easy numbers here, say you have to have at least 50% debt to income ratio. Now, you want to go buy a new sofa, planning for the new home. You don't want to buy that sofa until after you close, especially if you're on that cusp. Because if you buy that sofa, they check your credit right before you close. Now your credit to debt income ratio is flopped. You're over the limit. You're over the 50%. Now you have a problem closing on the home. And that furniture you just bought, you won't be able to put into your new home, because now your loan needs to be redone. So it's definitely a big thing. Do not make any major purchases, especially if you're right on the edge of the income to debt ratio.
To feed off of what Steve just said, opening new credit cards. I know we all get excited. We've been pre-approved. We're under contract. Closing dates coming up. We want to get new supplies, whether it's paint materials, small cosmetic changes that you plan to do to the home. Wait until after you close to open up any new lines of credit, because like what Steve said, the debt to income ratio is a major factor in the pre-approval process. So if you're right on that cusp and you do open up a new credit line, it could drastically affect you closing on that home because you're gonna surpass that 50% debt to income ratio. So moving money around, a lot of first-time home buyers get money from family members, friends to help with the down payment, something like that. You wanna be very careful with the money you move around, because if a lender sees a bank account with, say, for example, $20,000 in it, and then come to closing, there's $35,000, they need to know where that money's come from. An easy way to do that is a gift letter. Whoever has provided those funds to you, have the mortgage lender put together a gift letter signed by both parties, and that will resolve the issue of moving large amounts of money around. In regards to cash, obviously people can purchase homes with cash. That doesn't mean physical bills. I've had clients say, can I just bring a bag of $50,000 to the closing table? That is not allowed. The money has to be traceable. If it comes from an unsecure location, or like I said, you're just bringing in a bag of cash to a closing table, that will not be accepted. Tax purposes and everything like that. They need to be able to trace where the funds came from to know it was done efficiently, legally, and the money isn't coming from a unauthorized account.
This is what caused the fall of the mortgage game back in 2007 and 8. People were doing this. I mean, this is why the regulations are so high now. Go watch The Big Short. You'll see exactly what I'm talking about.
And in regards to a career change, very important that during the pre-approval process, if you are planning on changing careers, you may want to wait until you're into that new job before you get pre-approved. On average, they'd like to see 2 years of the same position to base off the pre-approval. There are ways around that. They can verify off of older income from previous jobs, but we have to be careful because transitioning from different industries can drastically affect the pre-approval process, because they are not able to trace back 2 years of income to verify that the money you'll be making is going to be consistent, so that there won't be any downfalls or any hesitation for the lender knowing that you will not be able to make that monthly payment every month.
A really big thing about the career change I wanted to add, if you're thinking about leaving your job, do not leave before you close the loan. Once you close the loan, you can quit and go to the other job. But they verify, lenders and loan originators, they will verify your employment 2 to 3 days before, if not the day of the closing, when you're before the closing, if you're still employed. I've had it happen to me. I've had a client, we go all the way to the closing table, and they checked her employment the day of, and she quit her job 2 weeks before that. So the loan did not close. She was not able to buy the home. She did not tell anyone that she quit her job. She didn't get a new job. And so she lost the home that she really wanted. And now, she's back to renting. And, it's just an ultimate thing that you really need to explain and tell somebody prior. It's not good to hide any of that information from the lender. I know, it seems to be a personal situation, but at the same time, this whole process is very personal. So when working with professionals, you need to work with someone that you know and trust and can trust this information with. And so we try to tell people, when selecting a lender, you want to make sure that you go with someone that is either, you've worked with, or your family knows, or that we've suggested.
And just to backtrack in a brief overview of the don'ts of the loan process, again, no major purchases while you're through the pre-approval process. We don't want to open up any new lines of credit. Do not move money around from bank accounts. If you have submitted bank accounts to the lender, make sure that those balances still show and aren't going to be changed in a positive or negative way. And if they do, you have to have a gift letter or be able to trace where those funds came from or went to. Again, untraceable money. We can't just show up to the closing table with a bag of cash. And the career change, biggest thing, If you are planning on making a career change, wait till after you close, because like Steve said, they will verify your current position 3 to even a day before closing, and we have had instances and scenarios where people have quit jobs, changed jobs, have not let anyone know, and then it prevents them from being able to close on the home, losing their deposit, and ultimately putting them in a worse position, having to now rent.
So, if you have any questions on the do's and don'ts of the loan process, please contact us when you get a chance. Anytime, we're available. I'm Steve, this is Cole. Thank you for tuning in, and we really appreciate you listening.